no one's talking about in the mainstream media is that the world doesn't trust the US dollar, the US Treasury. It wants gold. It wants gold as a strategic reserve asset more than anything else right now. It's kind of like an army preparing for battle now wants more ammunition on its side of the river. They are symptoms of a world moving away. And I think, again, it's away from US hegemony and away from the US dollar, not replacing the US dollar, but repricing it. These are major effects that impact gold.
For over a century, the US dollar has been the backbone of the global financial system, facilitating trade, pricing commodities, and serving as a prized reserve asset for nations and individuals. However, this dominance is now being challenged. The current gold bull market began in 2016 and is particularly notable because it is unfolding without the usual catalysts of a weakening dollar or a global financial crisis. Nations and individuals that once relied on, accumulated, and safeguarded the dollar as a store of value are now reassessing its role. This shift can be traced back to the 2008 financial crisis, which cast doubt on the banking system's stability and Western economic leadership. It was further accelerated by US-led sanctions against Russia, highlighting the risk of the dollar being used as a geopolitical weapon. The imposition of tariffs has only reinforced these concerns. Since the collapse of Lehman Brothers in 2008, gold has surged 275%, and since Russia invaded Ukraine in 2022, it has climbed another 50%. Meanwhile, reckless fiscal policies and increasing political instability in the US suggest that traditional drivers of gold demand could intensify. As a result, the world is gradually yet deliberately reducing its reliance on the dollar, a shift most evident in declining currency reserves and a surge in central bank gold purchases. Matthew Piepenburg contends that this is a clear and undeniable signal that mainstream media has largely overlooked, indicating a growing distrust in the US dollar and treasury assets. He explains that the movement of gold is part of a broader trend, reflecting a global transition away from US hegemony and dollar dominance. This shift isn't about an immediate replacement of the dollar, but rather a fundamental repricing of its value in the global financial system. We're about to explore the video, but first, subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
To me, right now, when I look at the markets, geopolitics, the economy, the rot is hidden in this complex thing called the COMEX. And I don't want to get too wonky and get too into that. For some people, it's very familiar territory. For others, it's not. The COMEX is not a gold reserve. It's a credit platform, basically. And without getting into all the details of the COMEX, 400 metric tons of gold came in from England into the US since Trump was elected in November and today. And that's fascinating in and of itself. And the reasons why, what's really important to understand is about 9 billion stood for delivery to go out of the COMEX. That was during the COVID crisis. So that was a huge event during COVID. And there was a big crisis. 9 billion worth of gold going out of the COMEX, which is not meant to be a revolving door. The gold is supposed to stay in there, churn and roll over, and frankly, price fix gold. But what we saw in just the last week was 21 billion of gold going out of the COMEX. And again, without getting into all of the wonkiness of it, that's a massive indicator. That's a rotten leaf of a bigger tree symptom to me, this COMEX, because by the way, that's 4x the pace of what it was 2024. So why is all this gold leaving this credit platform? Because it's not really meant for delivery. And I think that's a question that people need to look at without having to understand COMEX, which is almost as intentionally complex as the derivative markets. It's supposed to be off your radar, beside your radar, under your radar for average investors. But when you're seeing 21 billion worth of gold going outside the warehouses in New York and the COMEX and going back to the zip codes of the counterparties, that's saying out loud, no one's talking about in the mainstream media, is that the world doesn't trust the US dollar, the US Treasury. It wants gold. It wants gold as a strategic reserve asset more than anything else right now. It's kind of like an army preparing for battle now wants more ammunition on its side of the river. And when you see those kind of outflows called standing for delivery or open interest out of the COMEX, again, if you get past the wonky side of the COMEX, what that should mean for retail investors, real simple, is the world doesn't want to keep its gold revolving in credit kind of schemes. It wants physical gold in its zip code because it's getting ammunition for what is to come. It's loading its guns. And what is to come is there is a clear move away from U.S. hegemony in the U.S. dollar, not a replacement of it, but a repricing of it. And there's a clear understanding that this risk-free return or return-free risk of the U.S. Treasury is not nearly as important as physical gold, that analog old pet rock that people have poo-pooed for years. It's not a gold bug case. It's an actual piece of history happening right now in live time. So you can't underestimate what's happening in the COMEX. It's simply just more trusted as a strategic reserve asset than the once sacred cow of the U.S. Treasury. And again, that's confirmed not just by the fact that the BIS made gold a strategic, a tier one asset in 2023, or that the BRICS are stacking it, or that central banks have tripled their purchasing of physical gold since we weaponized the dollar in 2022. These are not gold bug cases. This is history in motion right now. And I think it's really important for people to understand that the world now trusts physical gold more than paper money in general, and the US dollar and US Treasury in particular. I think that's a really important thing that's happening right now. It's a major theme. Debt destroys. And as David Hume said in 1750s, and debt destroys bonds, it destroys stocks, it destroys currencies, it destroys economies. And again, the world is not ending, it's changing, Jesse. And it's like, again, the US is 26% of global GDP. China, another big competitor, is about 17% of that. So it's not like China's replacing the dollar or China's replacing the US, but it's changing. And the fact that, 45 countries are transacting trades outside the US dollar, that 30 countries are repatriating their gold inside their zip codes, that the BIS has made gold the only other tier one asset, that 20% of oil trade is going outside the US dollar. These aren't just trying to recite facts to show how much data you can memorize. They are symptoms of a world moving away. And I think, again, it's away from US hegemony and away from the US dollar, not replacing the US dollar, but repricing it. These are major effects that impact gold. In terms of the themes beyond just that rot and what the COMEX represents and what gold symbolizes and what it's saying to the world, in terms of the other major themes that I think investors, obviously of all stripes, need to be aware of, is what's happening in the markets too. And we can get in more detail.
As the US dollar weakens under bearish pressure, gold and silver are building a strong bullish price structure, signaling an imminent upward move. Matthew Piepenburg remains bullish on silver, rejecting its standard label as the poor man's gold, and instead calling it the smart man's investment. While gold has been the primary focus for investors, silver is poised for a golden era of revaluation, with explosive upside potential that could surpass gold's performance. Given that silver's market is only 1/5 the size of gold's, it exhibits greater price elasticity during periods of capital inflows. Historically, silver has significantly outperformed gold in the later stages of precious metals bull markets, often delivering gains 2 to 3 times greater. Piepenburg highlights several key factors supporting silver's long-term potential, including 7 consecutive years of supply deficits, mining restrictions on open-pit operations in Mexico, and political instability in African nations that are critical silver producers. Now, let's redirect our attention to a video.
And silver, I think, is fascinating. I mean, silver to me is biblical. It's literally mentioned. I mean, Jesus was betrayed for pieces of silver. Our Constitution mentions silver in its original form before we destroyed sound money in 1913 when the Fed was created. And silver, even as far back as 1935 in China, silver was part of their currency. That's not that long ago. Yet to me, silver is fascinating. I mean, really, we were talking about this in Cape Town just in February, year over year, silver's up 48% from year over year. And yet it's still probably one of the most undervalued assets in the world. And, it's kind of cascades as the poor man's gold. I think that's an unfair. I think for the smart man, it's the smart man's investment, not the poor man's gold. Rick Rule famously said a couple of years ago, I quote him all the time, silver rewards infrequently but extravagantly. And I think that's something we need to talk about. I think that's something retail investors have to think about. The gold silver ratio is now around 90 or above 90. It's nowhere near 1980 or 2011. It was like 15 and 32 levels. It does have a lot of tailwind behind it. It's got 7-year supply deficits. I mean, you've got open pit restrictions in Mexico, so you can't even mine pure silver. We've had 12 to 14 coups in parts of Africa where most of silver is mined. So there is this massive supply mismatch, and I think that's going to help the price longer term. A lot of conversations have been had in the last few weeks or months about China and the People's Bank of China having really been suppressing gold since 1983. China's been buying gold kind of off the radar of the IMF or the World Bank. And, whenever a major mine operation, certainly Glencore, when they were mining silver and they needed to cash to pay operations, to pay management. They needed to get it to refineries. A lot of those refineries, a lot of those buyers were in China. So they've been doing very quietly what the Chinese, whatever you think of them, do best. I always say they're playing chess while the rest of us are playing checkers. They've seen the writing on the debt wall in the West in general, in the US in particular, for decades. And as we've been going further and further into debt, issuing more and more IOUs and debasing our currencies and printing more of them, they've been stacking silver and gold very carefully, very deliberately, and very quietly. And that includes silver. So there's a number of forces at play, whether it's supply and demand mismatches, whether it's suppression out of China, and whether it's just the gold silver ratio coming back to equilibrium into even in the 30s or 40s or 50s. That gold could really, I mean, excuse me, silver could really skyrocket. We always say that silver is, not for widows and orphans, Egon's famous phrase, it is the little jet speedboat next to the big gold juggernaut. When silver moves in any direction, it's fast and furious. Gold kind of moves along at a steady kind of secular pace. When gold really catches more and more momentum, silver will follow. And so for those who have been buying silver at 10, 15, 20 and hoping for 50, 100, 150, again, as Rick says, you got to be very patient, but the rewards will be extravagant. I don't think you have to wait for 20 more years to see silver really rip. And for those who can't or don't want to buy large amounts of gold and can get more silver right now, whether it's at a retail shop down the street or at a private vault somewhere outside of that, I think it's a long-term play, and I think it'll be a very generous play. But I know they've heard that for years, but silver has rewarded in the last year, certainly. And, as I said often from the Gladiator, are you not entertained? But until silver is at 100, 150, 200 or higher, they think it's not doing what it's supposed to do. I think it's a very smart play for retail investors. And again, I instruct them all to just stay informed on that, follow the silver markets, even what's happening in the COMEX, because COMEX didn't just manipulate the gold price. When you see gold leaving the COMEX, that means there's less gold available for the COMEX to lever at 96% paper and 4% gold. It's the same with silver. Silver's been leaving the COMEX at record levels as well. So the ability to price fix legally on the COMEX is getting weaker. I've warned that was going to come for the last 4 years. It's happening as we speak. And it also, again, these supply deficits and this suppression out of China, all these forces are coming to play, I think, is a real tailwind for silver. And I think it's a fantastic investment for retail investors.
Unlike the past century, the global financial landscape is experiencing a historic transformation. Confidence in the US dollar and treasury assets is deteriorating, driving central banks and investors toward gold and silver as trusted stores of value. Bonds have entered only their second prolonged secular bear market in a century, while the long-standing 15-year bull run in equities nears its conclusion. As gold solidifies its dominance over the traditional 60-40 portfolio, silver is poised to be the greatest beneficiary of this shift. With trust in the US dollar fading, do you see gold and silver as the ultimate safe haven assets in today's financial landscape? Join the conversation. Share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.